Here's a state of the economy view from none other than Sanjiv Bajaj, the CII president who spoke to Siddharth Zarabi, Business Today TV's managing editor. Listen into that conversation where he talks about the rising trade deficit, the depreciating rupee, and also concerns around inflation.
I talked to you at a time when we have seen record highs once again in the trade deficit. And in the recent past, the government of India has taken several steps. Um, do you think these steps are likely to help us tackle the rising trade deficit?
We've seen this for the last couple of months. Let's see how it pans out in the coming months as well. We are in an unusual situation where, when you look at the Indian economy by itself, has shown reasonable growth and has been quite resilient. On the other hand, we have inflation that's playing truant, driven by a bunch of external factors. And some of them beyond our control, whether it's oil, whether it's the war situation, the supply chain disruptions that we keep seeing again and again. Keeping these things in mind, I think both what we've seen the RBI do with taking rates up to tame inflation by bringing down some domestic demand, as well as the multiple actions that the government has taken, has resulted in inflation moderating last month. But I think we need to see a few more months before we decide whether these steps are enough or whether we need to do more.
Mr. Bajaj, how much should the ordinary borrower in India be prepared as far as interest rates are concerned? How high can interest rates go given the current situation?
We've seen the last 2 years through the pandemic are all-time low interest rates. So even with the 90 basis points that RBI has increased rates in this fiscal, we are still below where rates were prior to the pandemic. And we are about 25 basis points below that. And to that extent, I believe that RBI does have some more ammunition left. The balance, however, that is required is that while some of these rate hikes will bring down domestic demand and to that extent correctly bring down inflation, but a large part of our inflation is supply side and it is external. So I would hope that we see sensible rate hikes because if we go much beyond that, we will end up bringing growth down rather than bringing inflation down. But we've got smart people all over the place, including at the central bank. And I'm sure that they are more cognizant of this than the rest of us. So we should wait and watch. I believe rainfall has started off well. And if we see a good monsoon, then we should see a moderation in food prices. We're starting to see a moderation in commodity prices, as you know. So for all that we know that the worst may be behind us, but I will not declare victory so early. Wait a few more months.
Mr. Bajaj, I have a couple more points to discuss with you. One is this windfall tax on crude oil production. There are some export restrictions also and higher duties, import duties on gold. Do you think these are necessary steps in the current context, or do they interfere in a sense with normal market dynamics? And do you think there should be a end date for the export duties that have been put on petroleum products?
Well, we are in an exceptional situation, and that's why this requires tactical initiatives to help us bring our economy on a more even keel. But yes, as you said, the triggers that have led to these actions should have a reversal trigger as well that can be time-based, that can be based on certain other numbers, which, as you know, as far as the export duty is concerned on oil products, the government has indicated. So they are, I would say, actions taken for a particular situation or a particular period of time. And once those are over, those actions should be removed as well.
As the president of CII, India's largest trade body, what would you say at this stage is required in terms of policy interventions? Because while we are talking about taxes, there's also been a GST of 5% that's been imposed, for example, on hospital rooms, and there is some reaction on that front also. So, in the current framework for the next 6 months, what kind of specific policy interventions would you expect?
So the last point that you mentioned is really on room rates over 5,000 rupees. So it is in a particular limited set of room rates, which goes well beyond what one could say is affordable. Overall, I think what we need to look to do is for the government to continue its infrastructure spend. It's done this very earnestly over the last couple of years and should continue to do so. Accelerate, I would say, the divestment program, the asset monetization program, because that's what will provide additional funds as well. We are starting to see capex investment by the private sector in a number of sectors, from logistics to real estate, commodity, construction. And as inflation moderates, we will see more and more of this happening, because capacity utilization has increased over the last few years across multiple sectors. So I think we are in a situation where it calls us for some amount of patience and doing what we've been doing so far, and with tactical actions being taken as required.
One very quick and final point, and this is to do with inflation. Your own sense about when you expect it to really cool off and stabilize in the near future?
That's quite a loaded question. I wish I had a crystal ball for that, because we are in a period still of significant uncertainty. And inflation that's being driven by actions outside of India, very difficult for us to take that call. But I do hope that we have a good monsoon that will shave off, I believe, almost 75 basis points, if not more, of inflation, provide some amount of relief. And some of the actions RBI has taken and likely to take further should help bring it in control as well.
Mr. Bajaj, as I let you go, I want a passing comment from you on the rupee. I have a report with me from Nomura that's come out today, and they say that we should be prepared for record high deficits becoming the norm, and the rupee at 82 to the dollar by the third quarter of the year. Your comments on that?
We believe that rupee should find its own normal levels. It has its pros and cons based on which side of the equation you're in. But where the central bank can and is playing a role is to minimize volatility. As long as the rupee gradually resets to a value which is reflective of where it stands intrinsically, that is fine. But excessive volatility is what we hope gets avoided.
All right, Mr. Bajaj. Thank you very much, as always, for those quick comments about the current economic situation. We hope to connect with you again very soon. Thank you very much for your time with us today.
If you like the video, do like, comment, share and subscribe.